Hey, good morning, everyone. Hope you're doing well. It's October 6th, right? It's Friday here today, and we had the non-farm payrolls that came out. Non-farms are the jobs numbers that come out they come out every Friday of every month. So the first Friday of every month, you're going to get that non-farm payroll number, which is the jobs added in the prior month. So we're looking at the jobs that were added in September, as well as the unemployment rate and the average hourly earnings year over year growth. So the headline figure is the actual jobs numbers added in the prior month, right? This is what we're focused on. And today, right, the headline figure was 170,000 jobs expected to be added in the month of September. That was the prior month. And what we actually got was 336,000 jobs added in the prior month. This is a massive, massive beat, right? It's like a 2x beat on this. Which put a lot of downside pressure in the market, right? We were trading at the 4,300 area on the S&P 100 futures before we got the substantial about 60-point drop from that high before prices kind of solidified. Right now, I'm not too sure where this at because my platform actually crashed, so did not trade this event with our team, but we got Fatty in there doing it for us. So at this point, the jobs numbers that came out, massive beat. Why'd the market dump? Why'd the market get destroyed this aggressively, realistically? You have to think about it in terms of the Federal Reserve's policy, right? Their expectations, the tightening of the job market, right? How tight the job market is, because a big ad creates more tightness in the job market, which suggests that there is more inflationary pressure to the upside, which is not which is not necessarily what Jerome Powell would want out of this market, right? A lot of this heightened and increased inflation is a bad sign for rates because rates are going to sustain higher for longer. Speaking of rates, I didn't take a look at what the US 10-year was doing on the move here. Back, right? New high actually. The prior high of the US 10-year was 4.884, current high 4.887, so marginal high on the US 10-year off that news, which makes sense because rates are going to be expected to stay higher for longer, putting more downside pressure in the bond market. So this thing got destroyed off of that labor stat, right, off of that news. And from here, right, on the S&P 500 futures, what happened is we actually broke the distribution low area, right? They temporarily held it, and there's a lot of volume that's actually been accumulating into the downside of the area. Now, we've had this massive drop. A lot of people are looking at realistically a continued move to the downside to see more of an expansionary move. However, I would caution a lot of people in looking at this because we've had a very strong extension. Typically, what happens in these markets after you get a very strong extension on the overnight session is some kind of profit taking, some kind of pullback. I'm not saying that this day can't turn into a viciously bearish day, right? But I'm saying right off the open, be very careful trying to sell aggressively right off the open unless real sellers come through, right? Just wait for maybe some profit taking, see some of these longs come out. There's a lot of volume that's stacking up into the lows. A lot of people might think I'm insane, but I am looking for that slight little pop here on into the lows on the market to see how much can we get on the buy side before any sellers come through. So if I'm looking at this logically, right into the low 50 area on the S&P 500 futures is the first barrier I would like to see buy side step in at, right? Otherwise, we're probably going to be targeting into that low to mid 30, which is a distribution top to start, right, before a larger move opens up and we can get another 30-40 point drop to the downside. Is today going to be the rug pull that everyone is waiting for, looking for on a Friday off of the non-farm news? I don't necessarily think so, right? I'm not necessarily that bearish, even though we've had a very significant drop. Just keep that in mind. We're gonna have to see how we actually move back into that area. So keep that in mind as this is holding out, right? Don't be super bearish about all this stuff. Just understand where the volume sits. There could be some more bearish momentum, but anything back above the mid 60s on the S&P, we're most likely going to try to trickle into those high sessions. So I'm going to leave you with that short update, right? I'm trying to figure out all these platforms. What the hell is going on here? So with that being said, I hope everyone has an amazing weekend. Non-farms are out. We are coming into a seasonal shift where we're expecting prices to turn a little lower, right, before we can see that expected rally into the end of the year. So have an amazing weekend, everyone. Take care, be safe, and we'll be back on Monday. Keep in mind, on Tuesday, we're going to be doing a live webinar to talk about distributions and order flow, how you can actually find market direction with high probability, understanding key order flow areas and how to find those order flow areas, which has helped us tremendously over the past few weeks, months, identify movement and very, very key entries and exits in the market. So I hope everyone has an amazing weekend, an amazing time. We'll be back on Monday, and keep in mind, check out community.tradeproacademy.com because we have an open Discord there. Thanks, guys.